We're taking a look at Charles Schwab. It has the proprietary STAX report for the month of October. All the trader activity, sentiment from the past month. We welcome in Joe Mazzola, head trading and derivative strategist at Charles Schwab. So glad you're with us. And I saw this marks a 5-month rally for STAX, marks the first 3-month stretch in which STAX growth actually surpassed the S&P 500 since 2021. What say you about this activity?
Well, let's talk about why we look at this, Nicole, because sentiment is so important in market analysis. And you were just talking to your prior guest about AI, and AI has just really kind of permeated into our STAX report, and that's where the sentiment is the strongest. That's where we're seeing buyers step in on pullbacks, and that's where we see the 3 biggest names are all kind of AI related. It's Nvidia, Meta, it's Microsoft, and what do the 3 of them have in common? At least with Nvidia and then especially Meta, buyers continue to step in on pullbacks. And if we talk about the overall market as a whole, we got about a 4% pullback from the highs, and that's kind of looking pretty shallow right now as we're looking at today. We're definitely off to the races. So why do we measure sentiment? Because it gives us an idea of when buyers might step in if we do get pullbacks. And we've had shallow pullbacks throughout, the rally all the way up from April. This one being, like I said, about a 4% a pullback. But as long as that sentiment remains bullish, we continue to see buyers step in like we did this time.
I think, can we stay on the buys for a moment? You mentioned some of the names here. Nvidia, Meta, Microsoft, Amazon, Palantir were in there as well. What's interesting is, so there's no question people are interested in AI and the Mag 7 and buying on the dips, but there was also a difference between Gen X and Gen Z. Gen X was willing to take more chances. Is that right?
Yeah, I thought that was interesting. I think it had maybe a little bit more to do with the kind of the rotation into the stocks as opposed to maybe looking at kind of the generation breakdown in terms of risk. So I think basically what we heard or what we saw from our Gen X group is that on dips, they were ready to buy. They kind of stepped in, and it's possible Gen Z might have been in some other products, maybe outside of these the 5 that we kind of talked about and discussed in terms of the buys, because when we look back over the last couple months, there was one thing that was kind of permeating from the last few months, and that was a little bit more interest in some of the kind of maybe AI ancillary names. So, things like CoreWeave we had talked about, I think, a few months ago. And then also maybe some of the stocks that aren't traditionally what we would consider part of Mag 7 names. What we saw this time is that the concentration of the buying was really heavily centered around those kind of Mag 7 names. Some of the other a little bit more high beta, high volatile names that had kind of made their way into the list the last few months. It seems to me that maybe that's where Gen Z had rotated before, and those had a little bit more volatility to them this month. So there might have been a little bit of, hey, let's back up a little bit, let's see what's going to happen, as opposed to stepping in and buying with the same veracity that we saw from Gen X.
I also thought, it was interesting. I'm combining the ideas here, but the sentiment showed people were feeling bullish, 57%. And that would explain why people were also putting inflows into ETFs and mutual funds and fixed income as well, right? I mean, people are still feeling positive. They're doing inflows. They're investing. Is that right?
Yeah, it is. And I think it's really interesting because, Nicole, we talk about the behavior, which is the STAX, right? But then we also talk about the attitudinal survey, and we do a monthly and then even a quarterly attitudinal survey with our traders when we ask them what we think is what they think the market's going to look like over the next few months and what they might be doing. And it's been interesting to kind of see the dichotomy between the two, saying, yeah, we're bullish, but we're bullish, but we're concerned about Washington. We're bullish, but we're concerned about valuations. We're bullish, but we think AI might be getting a little bit long in the tooth. But yeah, when they do get the pullbacks, they're still stepping in and buying it. So I think as long as the behavior maintains that bullish sentiment, the attitude, that I think that's okay if that kind of backs off a little bit, as long as you continue to see the behavior. If that starts to rotate a little bit, if we see that start to get a little bit more bearish, that's where I might be a little bit more concerned about inflection points in the market. But it seems like we're still on that same path that we've seen in the last few months, and that's just when you get the shallow pullbacks, people are stepping in.
And I heard a lot of that at the Impact Conference too, Joe. A lot of positive, but market breadth this or concerns about that. I mean, people, it seems that they want to be positive, but they're a little nervous. At the same time, we talked about a lot of the buys and the AI trends. When it came to what people sold, AMD, Apple, Tesla, Eli Lilly, and Intel. Tell me about the selling that went on. Any thoughts there?
What was interesting about those, Nicole, is they all had something pretty similar, or at least in common, and they all had pretty big moves to the upside. At least the majority of them did. AMD had a 20% move in one day, was actually up over 50% on the month. You continue to see the buy the dips, sell the rips type of mentality, and they sold the rip in AMD. Tesla, had a nice month in October before they started to pare back some of those gains, and Apple set an all-time high. So those are three of the names that we saw the heaviest selling, and then even Eli Lilly has rallied from 600 up to 950 or so, where it's trading right now. Yeah, it's now it's 960. So we've seen some big rallies in these names, and what I think is really interesting, and this is where I think once again there's some conservatism amongst this behavior. I don't like to use this term FOMO because I'm not seeing it. I'm not seeing the reaching. What I'm seeing is our clients rotate out of big winners, move into opportunities to buy some of the pullbacks. And then the other thing I would say that's a little bit different that I've noticed recently, Nicole, is that on the institutional side, and maybe you heard this at Impact, on the institutional side, there's been a lot more of movement into some of the protectionist type trading strategies, buying puts, a lot of the hedging. And what we've seen a little bit more on the retail side is not only do they trim the winners, but then they use those as opportunities to maybe create option positions that will, replicate a bullish position. So it's almost like a stock replacement strategy. And that kind of just goes back to the education that we offer clients and what they're really, participating in. And that's whether that's the webcast, live events, or watching your show, where they find out there's a whole other myriad of opportunities for them to participate in the market that goes beyond just buying stock.
So it seems that people are more positive than negative and still going along. I mean, for example, we almost saw the S&P close below the 50-day, and we had one guest who was talking about, he said, I think it's 133 days, whatever. It's since April that we've been above the 50-day moving average, and there's a lot of little technical indicators that people are watching every single day. I'm going to give you the final word here, whether it's, the STAX report, the sentiment, or just the technicals on this market as we go into a November, December, January. Seasonality also helps the market in that time generally, not always.
You got it. So I'll give you 3 points to kind of close our conversation on. You talked about the seasonality. We're right in the middle of November, the beginning stages of November here, where, yes, it tends to be one of the better months. Number two, sentiment is improving. We continue to see that. And I think what is interesting is that, as we talked about this, April, the rally really began with the retail public. I think that institutions missed a good chunk of the rally. And even just look at some of the hedging behavior that I've seen over the last couple of weeks. They put a lot of hedges on coming into last week, and then now they're really starting to roll those out. I think they've got a little bit of a catch up to do. So that could give a little bit more of a boost into the end of the year. And then the last thing, Nicole, is, hey, now that we're rolling out of what's been a really good earnings season, you're going to start seeing more than likely some buybacks occur within the stock market. So a lot of the companies will be buying back some of those shares at the end of the year. Call it window dressing or whatever it might be. But those are all three things that can continue to keep this bull market moving.
Joe Mazzola, head trading and derivative strategist at Charles Schwab. Joe, great to see you. Thank you for all the details on the STAX report.